Hi, I'm Clifford Bennett from Herston Economics, and Friday was a pretty much all feel good day. European data was good, German business confidence was up more than expected, France business confidence there, manufacturing sector particularly, but business confidence there as well was strong. In the US you had strong earnings. In the US, you had a very good conclusion to the talks with China that the two presidents had. And in fact, the United States managed to stitch up an extra $45 billion worth of exports to China this year. So, that really bodes well in all sorts of ways, and some of them more subtle than not. Over the last year, we've had a lot of fictional, very fictitious scaremongering by US research houses which infiltrated our market, unfortunately, to suggest that China was a bubble. The whole time it seemed more like political rhetoric than having anything to do with economics or anything that made any real common sense. So given that the US is starting to improve its relations again with China, given that China's been kind enough to buy $45 billion worth of stuff from the US extra this year, I think the outlook for that relationship is better, and we should actually start to see, it'll be like a bit of magic, you'll actually start to see US firms now giving out more positive outlooks on China. Just while we're talking about the positive outlook on China, as we discussed on Friday I said we'd have a higher Dow Jones that night, and we did. But that strong GDP number again out of China, 9.8%, what a ridiculous reason for people to sell commodities, because it's too strong. They'll have to raise rates to slow it. Come on, it's a complete nonsense argument. And the reality is that Australian commodity producers are going to continue to have trouble to keep up with demand. Fortescue, BHP, all planning to greatly increase production over the next 12 months, 24 months, 36 months, simply trying to keep up with this burgeoning demand out of China and in fact all of Asia. So that's going to continue to be the case. So as we said last week, great dips to buy. As we said the week before was the lows of the year. It still looks like that was the case. As we said last week, it was a dip to buy. No, we're not always bullish for the sake of being bullish. We actually think the markets are going a lot higher, and all this nonsense about this negativity has finally run its course, and really it's just becoming obvious to blind Freddy that, apologies to certain people, but it's becoming obvious that the markets are all in good shape. It's becoming obvious that you're going to have synchronized growth and production on all three continents, Europe, China, Asia, and the United States. And the demand we saw over the last couple of years for commodities generally is going to be completely outstripped by a huge surge this year. So commodity prices, where they are now, absolute snips, going a lot higher, resource stocks going a lot higher. Our broad market, equity market today, will start to move up, but really it should begin to accelerate this week rather dramatically, I think. In terms of the Australian dollar, still fluctuating around, bouncing around a little bit, but it's an absolute buy. Euro's a buy, as we said, sterling our favourite. Oil, our other favourite, hasn't really performed over the last week. Maybe we'll go a little flat on that this week. Euro's had a strong run. I think that continues. As we've said before, a week or two ago, we expect Euro to go 145, maybe 156 this year. So we're very bullish Euro. Generally bullish everything except the US dollar. The weakening US dollar helps those exports, and we're going to see more of that. So buy what you can while you can. Have a good day.